Hey there, it's David Cohen, your local home loan expert. And today I wanted to answer the question of how do I buy an investment property? I get that question every now and then from people who are curious. They want to maybe dip their toe into the water, so to speak, of getting involved with rental properties or rehabbing. So I thought I'd give you just a brief overview of how you can apply for an investment property. First and foremost, understand that it's considered non-owner occupied, meaning you are buying this strictly for investment purposes, and there are some risk-based adjusters that are going to be imposed, such as a higher interest rate typically. You can expect at least a minimum down payment of 20%. In some cases, you might need to have some post-closing reserves, which just means that after your down payment and closing costs, you still have a certain amount of cash in your accounts, which we would view as reserves. And of course, the new mortgage payment goes into your entire debt to income ratio as far as what other debts you carry, including if you have a mortgage on your primary residence, and now you're taking a mortgage out on an investment property. But there is one nice little benefit that you can get to qualify when you purchase an investment property, and that is being able to use a percentage of the proposed rental income to help you offset that new mortgage payment. What I mean by that is when you decide to purchase an investment property and you go through the mortgage process with the lender and we order that appraisal, one of the things we're going to also order is a supplement called a comparable rent schedule, sometimes also an operating income statement. But the appraiser goes that extra mile to let you know what the fair market value rent should be for the property that you're buying. And so if, let's just say hypothetically, your mortgage for this new investment property is $1,000 and you can get $1,500 in rent based on the appraiser's opinion of fair market rent, we would, as the lender, take 75% of the $1,500 because we assume 25% is at least going to be for expenses. And we take 75% of that monthly rent, and we use that to offset the new mortgage payment. We don't use it to give you income, but we can use it to offset that new mortgage payment. So to the extent that 75% of the fair market rent is above your mortgage payment, well, we'll only use enough of it to wipe out that mortgage payment, which helps qualifying a little easier. So somebody who has no previous experience as a landlord, they have no investment properties, this is one way that you can get involved, get into an investment property and be able to qualify with a little bit of help from the proposed rent. So if you have any specific questions, of course, around investment properties, please don't hesitate to reach out to ask me. I'm always available, 410-446-3317.